Good Sunday morning to the MMTs, 11:25 a.m. Pacific Standard Time. Today's date is 8/21 of 2011. What we have before us now is we're going to be taking a look here at two weekly charts. One of them is going to be a bull and a bear. We have the bear 3x up here. It's the TYP. And it's a weekly chart, and we can clearly see that we've had a 4-week breakout to this resistance line, which is referred to as a double top. The opposite side of the bull 3x, which can be shorted outright, you'll notice clearly over here the 4-week decline also looks identical to the NASDAQ 100, NASDAQ comp, and the broader components that work with bear and bull ETF structures within the NASDAQ structure, NASDAQ composite, is that you can see a mirror image of these reversals that we have trained through. We can see clearly here that in this 4-week breakout, that is how we were building a weekly base, a weekly range across these bottoms here in the bear. And that the bear for a number of months have been totally oversold, and we've had a great off the 2008 bottoms of back in the fall and Christmas time, and we started the new year out in 2009. We had great moves. However, there's been a major change, and what we're looking at when we're going to put a market bottom in, we're going to look at where the reversal will come in, but more importantly, MMTs, is we're going to look at how this base is being built in the bear. And you can see that it's at a 4-week breakout high right here through this time frame, right there on that bear. The bull, in the same 4-week period, you can see the amount of selling, and you can see that selling short up here around $45 even at the breaking point. This is the neckline where it broke, that you can make money. And you can buy, you can use option markets in different ETFs, bulls and bears. You can use shorting it outright and going long that side of the market. And how the TYP bear versus the TYE, both are weekly charts, by the way. Let's be clear on that subject. The weekly chart here on this bear, back in the calendar month of 6/27 of 2010, this was peaking at its all-time highs. Okay? And basically we pulled back in the month of 2010, 7/4. We were involved, and we went straight down and hit these weekly bottoms back here as we were trading them, and we made a high in the bear on 8/22 right here, 2010, which is about a year ago. And then what we did was that QE2 was coming into play, and the market had put a bottom in going into September week right here. This was at 8/29. And on stockmarketpunding.com you can find all of these very live trading videos, meaning with entries and exits, and all of the analysis are done there. Just type in the search box, it'll take you back to these times. So a year ago, you can see where the bear came all the way down to a 2011 major bottom here on the bear from this top end reversal up here, okay? And its original reversals were way back over here in 124 in the beginning of 2010. We had the big rally in the markets. Of course, the bear came down, and this was the stages back then. Then when we started moving in to the year ago in August, 2010 of August, there we had this big reversal in the bear. You short that bear down, and look at how many weeks down in a row it went. Okay? But then look at what happens in 2011 and the long term. So I break up to that trend line, I break, and these are all weekly movements here. And it's been building a base down here, MMTs, and we've been teaching you that. Most of you that have been in your apprenticeship so far have gone through good phases of this whole area as far as your TYP. That's the, once again, it's a tech It's a bear, 3x tech. And you can see this weekly breakout here. Look at the double weekly back-to-back. Now, on the other hand, we can see clearly here the TYH. And you can see where that had multi-weekly breakouts over here. And multi-weekly breakouts at the end of that 2009. This is where it started right here on a weekly level. And look at all the weekly moving averages. They're all going the right way. And what a great rally. And look at here in 2010 bottom zone. Look at the closing weekly bar. We're right here at a major area. This is where that last part of that breakout happened for that bull 3x. And it was a good breakout there. Why? On the other hand, when that was breaking higher, you can see how things break down. When they break down, then you get breakouts here. When that broke down, this broke higher. Let's get this all the way in the video. You can see here, back in that time frames, you can see here between the bears and the bulls and the breakout MMTs. We're building a multi-year top resistance level up here on the bull, and at the same time on a weekly level we're building a weekly bottom here that is tested at 3 major times and then broke out and made higher highs all the way back over to this calendar part of the current resistance levels right here in this major time frame here. So when we look at the weighted part of markets and how the overall longer term trend structures, then the midterm trend structures and the smaller macro time frames are how things play out and how markets actually start to change in their environment, in their price action environment. And it's very clear here that the tech bull has just been getting killed right here, and that the bear has built a long-term base. You got resistance on the bull here. That's a triple top right here. This is where this top support levels right in here broke it. So we can say that this is where it started. This was the upside volatility. That was the correction. Upside volatility, but at each time the bull sold off hard during the calendar weeks here. Let's take a look at the calendar weeks, MMT. We started this last sell-off in the calendar week of 724. Look at here, 731. This is that upside here of 8.7, and this is the last prior week of 8.14 of 2011. That's the whole last 5-day period. You're at the most critical level right here for the bull 3x, okay? And on the other hand, you're at a critical breakout level here on the bear because you closed up toward the highs. It's not like the previous week where the bear went up, it goes up, it tests this major trend line over here where major resistance always held until we closing up on the high of it now. So we sold off 1 week, but we came right back. But notice that the weekly bar, the body of it, of the green part of the bar, is right up below that $30 handle within pennies, 80 pennies, whatever case is. My point being is this is at a major breakdown level and this is at a major breakout level. What will happen on 8/22 of 2011, which is going to be tomorrow morning, Monday, we're going to see exactly which one of these breakouts or break. So if this is going to break, then that's going to make that a short again. Okay, and we're at a major breaking point on that tech bull right now. That means that the broader tech stocks have sold off and they're going to hit a bottom at some point. Lower volume will be in the remainder calendar month of August, called the dog days of August. It's easy to walk markets up on lighter volume, and it's easy to take them down on lighter volume. We'll let the MMTs know, looking at the 60-minute time frames, of what this market will really look like and what we're doing. So major breakout about to happen here and a major breakdown here. The trade management is, where the call side of the market and the put side of the market's going to be at these critical levels. All right. And that we'll be taking a look at the put to call ratio across the board on everything, so that we can see where these breakouts can continue to move higher, and or if this side of the market reverses, then this side of the market reverses to the upside, So we're looking at either directional movement, whether this was to fail and this is to hold. It really doesn't matter. What matters is what that daily trade management's going to be, and there's going to be a lot of other major factors that we're going to factor in with these movements here this year. And this is a good way to take advantage of good times in technology, and you can short when these things fail. And you can go long. There's lots of things you can do within the structure of certain, weekly breakouts and weekly breakdowns and weekly breakouts. It happens that way. And the price action volatility, stockmarketpenny.com clearly said that price volatility was going to increase. We told people that back in even April. Okay, and you can go to Stock Market Penny, look at all the index analysis before the fact. Take a look at where the market is now today versus what we were saying it was going to be then, and look at where it is today. But more importantly, is everybody had GDP growth at 4 to 5% year in. Sorry, that's not happening. SMF was totally on the other side of that. We've seen where problems happen and what these pendulum swings are. Look at the Dow history, going clear back to the 1970s to current. We have lots of things available. The thing that I want MMTs to understand is breakout about to happen and a breakdown. This is going to be a major point for what's left of the calendar month of August. September and October were going to be totally different asset allocation models, but listen, they've been doing that a lot lately. They've been selling everything down. So what is there going to be left to allocate in September? I mean, let's think about it logically. But there are different trade management scenarios that happen. I'm going to conclude the bull 3x, and I'm going to conclude over here this bear breakout right here. It's a weekly chart, and once again, TYP. If we pop a weekly buy signal over here, remember that you're getting oversold here. Yes, you got a weekly sell signal on that bull and have had it for 3 weeks, since the bigger part of the reversal's gotten 1 week, 2 weeks, volatility week up with the sell. Boy, sellers are right there. And at some point, we will get oversold where a bounce will occur in this. And on the other hand, though, on the flip side of it, when I bring up this piece of the trend, just this part right here, let's just focus on this part. Let's take a look at one thing that's very important. And that's going to be this MCD down here. It's minus 0.1873 right now. What happens is that it has not been in a weekly buy signal for a long time. And what do I mean by that? Let me show you. What I mean by that is this right here. I'm sorry, those trend lines came out, but that's okay. We'll put them back in here very quickly. And what I am going to show you, we've been in a weekly sell signal here forever. And we got really oversold here in that bear, and that's why that bear bottom held. And you need to know MMTs, that's a standard thing. That's not your market maker thing, but that's your standard thing. Now over here on the other hand, you can see at the very same time that the escalation here at the highs and the reversals, you started coming down, descending in value in that same indicator. So as this one was peaking and reversing, this one over here, which is the bear, you can see just the opposite, that it was ascending, and that's how the longer term bottom structure held. Yes, you had breakouts and pullbacks and breakouts and pullbacks and breakouts. You've had breakout 1, breakout 2, breakout 3. That's what's happened. And you can see that you got so deeply oversold. But now, over here, we are only 3 weeks coming down to an oversold area here where bounces will occur. There can be a timestamp on it as well. Could be several weeks, or could be several days, or could be 1 day, depending on what kind of market that we continue to have and the price action volatility. But guess what? Once the sellers are out of the way at one of these major market lines here in the SMF trading platform, not this one here, this is just a standard chart, but you'll know, MMTs, what we're looking for the rest of the trading month of August, and why this is very important, right along with the TQQ. That's the bull, TQQ, and the bear, SQQQ, moving forward. Good luck, MMTs.